Hello everybody, welcome to another update on the stock screener. And today I want to talk about a new gem. We keep finding new gems here, and that's QC copper and gold. But before we talk about it, let's talk about copper first. So what's the status on copper? We just go to our copper checklist, and you can see that the global real economic activity is going higher, so I expect copper to go higher, even though we have Evergrande problems. I think that's just a minuscule problem. I think the real activity, real economic activity is much more important, and that's pointing up. Copper to gold ratio. So the 10-year yield is also pointing upwards now, so that's positive for copper. Warehouse stock levels. For LME, it's pretty stable. It's going up a little bit for COMEX, but most importantly, Shanghai. So China bonded warehouse copper is going very low now. So we have shortages everywhere. Also, the futures exchange is going lower. So we have a very low amount of inventory in copper. It's around 600,000 tons now. So that's about here, 600,000 tons. So this red line has gone down until here. So that's very bullish for copper. We don't have enough copper. Also, electricity use is up, so China is still booming. We talked about this credit impulse problem, which is going down, the credit impulse. So we could see some weakness in copper due to this, but I expect that we will bottom out around December. And you can already see a bottoming out process here. So we could see some weakness until the end of December due to this impulse that's going down. But I think this is a bottom and we should go back up from January. So could be some weakness, but then we are going higher. The composite index, very important to watch. China went open again and nothing happened. As you can see here, China has no problems at all with Evergrande. So this is just BS. We are still breaking out on the Shanghai Stock Exchange. So this is a very bullish for copper. GDP in the United States is lower, okay, but it's still growing at 4%. At the supply and demand side, we don't have anything new to say. We are still in deficit for the coming 2 years. Copper scrap is still at a premium, so scrap is high, which means that the refined copper price will also go up. So we are in this situation here now. So if this goes up, copper will go up as well. Seasonality, we are in September, so this should be a bottom. So I expect copper from October, November to go up until next year, April. So this is the perfect buy right now. With of course some credit contraction to come somewhere in October and November, but this is an accumulation phase. COT report is pretty okay. It is bottoming out, so we could see increase in shorts and increase in copper price. Australian dollar was not that well, but I think it's bottoming out. Let's see. Yeah, so we have Probably a bottom here coming and then we go higher. Technicals are still looking very good. So we are seeing breakout and now we have this handle forming and then we can go higher. Commodity cycles are higher. We have oil going up, we have natural gas going up, we have uranium going up, everything is going up. Even steel is going up. Bulk shipping rates are very nice. Shipping is still booming. Container ships are rising, the rates are rising. So this is a very positive. Yeah, Danny, we had a new forecast. Forecasting much higher prices in stocks. 20% rise in the next 2 years. Very positive. We are still having inflation. It's flattening out, but still elevated. Good for commodities. This is flattening out, so we're still in a growth phase. Then the cycle set going down, and then we would start going up. So we are now probably somewhere here. It could bottom out in the coming months, and then we're ready to go higher. So I think copper is still okay to get in. Now let's take a look at our stock. So QC Copper and Gold is a driller, and the market cap is 30 million CAD. And I think this stock is going to break out. And I'll tell you why. So market cap in US dollars is 25, fully diluted is 37 million US dollars. Price to book is high, of course, this is an explorer. But when you look at the balance sheet, you see that they have cash, and that's all. So they don't even price in their assets, and they have a lot of assets. So what you see here is also this here, investment in associate, and we'll come to that. So they have about 3 million in cash for drilling. They have just released this here, the 43101. And this is the most important thing to look at now. So what did they release? They released measured and indicated resources of 1.5 billion copper equivalent. And this, very important, is measured and indicated. So that's a very high category. It's much better than inferred. So they have done a lot of drilling. So we also have some gold here, 800,000 gold. So this is about 20% and this is 80%. So it's a copper gold deposit. So 1.4 billion ounces of copper, 1 million ounces of gold, 4 million ounces of gold equivalent, or 1.8 billion ounces of copper equivalent. So we have talked about this. How do you value such companies? Well, you can use this here. So this is for copper from Ambrian. They tell you to put a value for exploration companies at 3 cents per pound. Okay, but I think this should be 5 cents per pound and closer to 9 cents per pound when they go into feasibility. So I have taken 5 cents per pound. And why is that? Because of this. The grade is 0.88%. 0.88. This is very high grade for copper. You can only find copper mines today at lower than 0.5%. So this is very high grade. So I add a higher multiple to that. So I took 5 cents. So what do we get? 1.8 billion ounces, I below 1 billion pounds actually, So this is actually pounds. And 4 million ounces gold. Okay. So this is 1 billion pounds. I just found this mistake. So let's go back to here. 1.8 times 3 cents, but I take 5 cents. And then what do we get here? We get 90 million in value. Okay. That's based on these copper reserves, 90 million. And if we look at the gold reserves, we have the 4 million ounces of gold equivalent. We do 4 million times 30, because 30 is used for explorers. Then we get, what's this? This is 120 million. So the value of this deposit should be around 100 million. Okay. Current market cap is only 25, fully diluted 40. So this deposit can actually even grow, and the market cap can actually double from the 25 fully diluted 35. It can double to 70 million US dollars based on these valuations. So this is actually very cheap. Also important, capex is low. We don't know what the capex is yet, but I have checked the map. It's in Canada. It has infrastructure. It has railways in place. So I think this is not going to be a multi-billion capex. This is going to be much lower because infrastructure is in place. So it's looking very good. They have high-grade copper at surface of 1%. So even better than the 0.88% in total. So they have some high-grade starter pits, which is very good. So I expect a very good PEA, which will come out at the end of this year. Now, this is all very good. Easy double from the current fully diluted price, but we have more to say. So apparently they also have 36% of baseload energy. So this is baseload energy, which has a market cap of 38 million CAD. So they own about 17.8 million shares, which is the 34% interest in this company. And this is actually a uranium developer. And so actually when you buy QC copper and gold, you actually also get uranium with it. And the amount that you get is 8 million US dollars. That's 34% of the market cap here. So you have $8 million of the 25 million. So that's almost half of the market cap of this company. So you have some exposure to uranium as well. So this makes it even better. That means that the market cap is not 25, but it's 25 minus 8. Okay. So it's more like 17 million US dollars, while the value should be 100 million dollars. So there's a lot of upside to come from this company. And you are exposed to the uranium bull market. So that's about it that I had to say. This mine life is easily 10 plus. So we are going to wait for the PEA to come out, and then this company would probably shoot up. And I expect the double. Okay, so that's it. I'll see you in the next video.